and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. The Cryptocurrency News End channel does not recommend any offers to buy, sell, invest, etc. in the cryptocurrency market in any way, and any losses and other consequences are your responsibility. Our channel only follows the news of the cryptocurrency market and does not provide you with any advice on making transactions. Please enter into transactions in the market with your own analysis. Bybit hit by $1.4 billion hack. North Korean hackers behind 11K plus crypto wallets linked to stolen funds. Solana, SOL, crashes 50% from its all-time high. Is this the beginning of a bigger collapse? MicroStrategy stock collapses 16% YTD. Is Bitcoin's crash dragging it to disaster? Nasdaq shocking move. Grayscale Polkadot ETF filing sparks crypto market uncertainty. Bitwise secures $70 million investment amid crypto market boom. But is it enough? Bybit hit by $1.4 billion hack. North Korean hackers behind 11K plus crypto wallets linked to stolen funds. In one of the most alarming cyber attacks to hit the cryptocurrency space, Bybit was targeted by North Korean hackers, resulting in a staggering $1.4 billion worth of stolen funds. Investigators are now linking over 11,000 cryptocurrency wallets to the hacking group, known as Lazarus, responsible for this devastating breach. The scale of the Bybit hack is massive, and blockchain analytics firms are working tirelessly to track and recover the stolen funds. Elliptic, a leading blockchain analytics firm, uncovered more than 11,000 wallets connected to the North Korean hacking group, Lazarus, which has long been notorious for executing cyber attacks with a focus on financial theft. The breach, which occurred on February 21, 2025, saw a coordinated attack that exploited vulnerabilities in Bybit's system. By February 25, just days after the hack, Bybit CEO Bin Zhou publicly declared a war on Lazarus Group, vowing to track down the perpetrators and recover the stolen assets. The exchange launched a blacklist wallet application programming interface (API) and even offered a reward for those who could help trace the stolen funds. While the company seeks to recover the stolen assets, Elliptic provided critical assistance by releasing a real-time data feed of wallet addresses linked to the North Korean hackers. These addresses, identified just 30 minutes after the announcement, aim to protect customers from exposure to sanctions while also helping prevent further laundering of the stolen assets. The speed at which Elliptic identified and published the list of suspected wallet addresses has played a vital role in helping protect users, Elliptic commented. Their intelligence API flagged 11,084 crypto wallet addresses, which are suspected of laundering the stolen funds from Bybit. This list is expected to grow as the investigation continues to uncover further details. Bybit has teamed up with the Web3 security firm Zero Shadow, which specializes in blockchain forensics, to investigate the attack and trace the stolen funds. The security firm is focusing on freezing the stolen assets and ensuring the maximum recovery possible. According to Nalysis, the attack began with a phishing campaign aimed at Bybit's cold wallet signers. This was followed by the interception of a routine Ethereum transfer from Bybit's cold wallet to a hot wallet. During the attack, portions of stolen Ether (ETH) were quickly converted to Bitcoin, BTC, DAI, and other cryptocurrencies, before being moved across different networks in an attempt to launder the funds and cover up the hackers' tracks. Despite the magnitude of the hack, Bybit has worked to ensure the exchange's stability. While the breach was a blow to the platform, Bybit kept its withdrawals open, securing external liquidity through loans to maintain operational stability. On February 25th, the exchange began the process of repaying these loans, starting with a significant transfer of 40,000 ETH back to its liquidity pool, Bybit. This ongoing investigation highlights the growing threat of North Korean hackers in the cryptocurrency space. As these hackers continue to target exchanges and launder stolen assets, the question remains, how can exchanges better protect themselves from such sophisticated attacks in the future? SEO question. English: what steps can cryptocurrency exchanges take to protect against sophisticated hacking attacks like the $1.4 billion Bybit breach linked to North Korean hackers? Solana, SOL, crashes 50% from its all-time high. Is this the beginning of a bigger collapse? The once thriving Solana, SOL, ecosystem is now facing a brutal reality. Its price has plummeted 50% from its all-time high, leaving investors and traders questioning its future. With $500 million in liquidity shifting to other blockchains, Solana's TVL collapsing, and the memecoin frenzy crashing, many fear that the worst is yet to come for SOL holders. Solana's all-time high of $295, reached on January 19, 2025, now seems like a distant memory, as its price has suffered a 42% decline in February alone, marking its worst monthly performance since the FTX collapse in November 2022. The massive sell-off can be traced to three major factors: a sharp decline in total value locked, TVL, a liquidity exodus to rival blockchains, and the implosion of Solana's memecoin market. Solana's TVL drops by $5 billion in just 1 month. One of the clearest signs of Solana's struggles is its total value locked, TVL, which collapsed from $12 billion to just $7.13 billion within a few weeks. The drop is largely attributed to Radium, Solana's leading decentralized exchange, which suffered a 60% outflow of funds. Other major Solana DeFi platforms, including Jupiter DX, minus 25%, Jito Liquid Staking, minus 46%, and Camino Lending, minus 33%, have also seen dramatic declines. The consequence? Solana's on-chain transaction volumes have crumbled. Weekly trading volume has fallen from $97 billion in January to just $7 billion, a staggering 92% collapse. The numbers indicate a sharp decline in investor confidence as more participants withdraw their assets from Solana's ecosystem. $500 million in liquidity leaves Solana for Ethereum and Arbitrum. Solana's network activity collapse is driving traders to Ethereum, Arbitrum, and Sonic, with over $500 million bridged to rival chains in the past month. The outflow suggests that Solana's once thriving ecosystem is rapidly losing steam as investors chase safer and more promising opportunities elsewhere. Notably, Solana's transaction fee burn rate has hit a new low of just $177,000 per month, signaling that fewer users are engaging with the blockchain. Crypto analyst Miles Deutscher summed it up perfectly. People are tired of getting burned at the casino, and many are walking away from the tables. The collapse of Solana's $25 billion memecoin frenzy. Another key factor in Solana's downfall is the implosion of its memecoin market. Just 2 months ago, Solana's memecoins had a staggering $25 billion market cap. Today, that number has shrunk to just $8.3 billion, with some tokens crashing 80% to 90% in value. At its peak, Pump.Fun alone launched 7.5 million tokens and generated $550 million in revenue, fueling an unprecedented memecoin mania. But as the hype faded, Solana's ecosystem suffered the consequences. SOL is not a memecoin, but its price was undoubtedly inflated by the speculative frenzy, and now that the bubble has burst, its valuation is taking a massive hit. As Solana struggles to recover, investors are left wondering, is this just a temporary setback, or is Solana's dominance fading for good? SEO question, English. Is Solana's 50% price drop a buying opportunity, or is the blockchain losing its competitive edge for good? MicroStrategy stock collapses 16% YTD. Is Bitcoin's crash dragging it to disaster? MicroStrategy stock, MSTR, is facing a severe downturn, plummeting 16% year-to-date, YTD, as Bitcoin's BTC price correction sends shockwaves across the market. The once booming company, which aggressively acquired Bitcoin as part of its high-risk investment strategy, now faces mounting concerns over debt accumulation, liquidity risks, and BTC's volatility. Could this be the beginning of a financial meltdown for the tech giant? MicroStrategy's Bitcoin bet under fire. As Bitcoin's price dipped below $90,000 on February 25th, following a 4% single-day drop, MicroStrategy stock mirrored the decline, plunging over 10% in one trading session to settle around $245. This marks a staggering 50% drop from its all-time high of $473 in November 2024, when the company announced an ambitious $42 billion Bitcoin purchasing plan. Market analysts are now questioning whether MicroStrategy's aggressive Bitcoin strategy is sustainable, particularly given its high exposure to market volatility. The Kobayashi letter, a financial research firm, pointed out that the company's ability to raise capital is solely reliant on its expanding Bitcoin treasury, a risky approach that could lead to liquidity concerns if BTC crashes further. In a scenario where their liabilities significantly exceed assets, this ability could deteriorate rapidly, the Kobayashi letter warned in a February 25th analysis. $33 billion Bitcoin holdings, a double-edged sword? MicroStrategy has poured over $33 billion into acquiring Bitcoin since 2020, with an average cost per BTC of approximately $66,000. Currently, the company sits on an unrealized profit exceeding $10 billion, according to data from MSTR Tracker. The company has largely funded its BTC acquisitions through a combination of stock issuance and $9.5 billion in convertible debt, with most of this debt maturing in 2027 or later. While this structure shields MicroStrategy from immediate liquidation risks, it heavily ties its financial stability to Bitcoin's future price movements. According to analysts, a prolonged BTC downturn could force MicroStrategy into a dangerous financial position. The Kobayashi letter estimates that for the company to face forced liquidations, Bitcoin would need to drop over 50% from current levels and remain there until 2027, a scenario that can't be ruled out given past market cycles. MSTR's future, a gamble or a strategic move? Despite the mounting fears, some analysts remain optimistic. On February 6th, Benchmark Research raised MicroStrategy's stock price target to $650, arguing that the company will continue raising capital to fuel its BTC acquisition strategy throughout 2025. A major factor behind this bullish sentiment is MicroStrategy's Bitcoin yield metric, which measures BTC holdings against outstanding shares. The firm is aiming for a 15% Bitcoin yield in 2025, effectively tying its financial health to BTC's price trajectory. Are MicroStrategy and Bitcoin heading for disaster? With MicroStrategy's stock tumbling 16% YTD and Bitcoin struggling to regain momentum, investors are left wondering, is MSTR's Bitcoin strategy a ticking time bomb? Or is this just a temporary setback before another explosive rally? Nasdaq shocking move. Grayscale Polkadot ETF filing sparks crypto market uncertainty. Nasdaq's recent filing to list the Grayscale Polkadot ETF has sent shockwaves through the cryptocurrency industry, further fueling speculation about the U.S. Securities and Exchange Commission's (SEC) stance on altcoin exchange-traded funds, ETFs. As regulatory pressure mounts, investors are left questioning whether Polkadot DOT and other altcoins could soon be recognized by mainstream financial markets or face an uncertain fate. Grayscale expands its ETF ambitions amidst SEC scrutiny. U.S. Securities Exchange Nasdaq has submitted an application to list the Grayscale Polkadot Trust as an ETF, according to official filings. If approved, this ETF would join Grayscale's expanding suite of publicly traded crypto funds, adding Polkadot DOT, currently valued at $4.83, to its growing portfolio of digital assets. This filing is the latest addition to a long list of applications with the SEC as asset managers and exchanges continue their push for ETF approval for alternative cryptocurrencies. However, with past rejections and delays, the fate of Polkadot's ETF remains uncertain. The SEC must conduct a rigorous review process before allowing trading to commence. Grayscale's ETF portfolio grows as Bitcoin and Ethereum dominate. Grayscale already manages two spot Bitcoin, BTC, ETFs and a spot Ethereum, ETH, ETF, valued at $89,014 and $2,484 per coin, respectively. But the asset manager isn't stopping there. In addition to Polkadot, Grayscale is seeking approval for ETFs tied to Solana, SOL, Litecoin, LTC, XRP, dogecoin, Doge, and Cardano ADA. Furthermore, the company has proposed an ETF holding a diversified basket of altcoins, aiming to capitalize on the growing interest in the digital asset sector. Grayscale has already introduced numerous single-asset crypto funds that, while not publicly traded, have been widely utilized by institutional investors. Crypto ETF race heats up amid political and regulatory shifts. Grayscale is not alone in its pursuit of altcoin ETFs. Several asset managers, including 21 Shares, have submitted applications for similar funds, signaling an increasing demand for diversified crypto investment products. Proposed ETFs for Hedera, HBR, and the controversial official Trump token further highlight the growing competition in the sector. However, the SEC remains unpredictable. While the regulator softened its stance following U.S. President Donald Trump's second-term victory, the industry remains haunted by its aggressive actions under the previous administration. During President Joe Biden's tenure, the SEC filed over 100 lawsuits against cryptocurrency firms, alleging securities law violations. Although the agency greenlit spot Bitcoin and Ethereum ETFs in 2024, it has yet to approve ETFs tied to other digital assets. Is the Polkadot ETF approval likely? Analysts weigh in. Analysts remain divided over the SEC's likelihood of approving Grayscale's Polkadot ETF. According to Bloomberg Intelligence, the probability of an XRP ETF gaining approval is estimated at 65%, while Solana, SOL, and Litecoin, LTC, stand at 70% and 90%, respectively. Despite these relatively optimistic odds, Polkadot's status remains uncertain, leaving investors wary of potential regulatory setbacks. With regulatory tensions rising, how will the SEC's decision on the Grayscale Polkadot ETF shape the future of altcoin investments? Bitwise secures $70 million investment amid crypto market boom. But is it enough? In a major move signaling continued investor confidence in the crypto asset management sector, Bitwise has successfully raised $70 million in fresh funding. The financing round, led by Electric Capital, MIT Investment Management Company, MassMutual, Highland Capital, and Hound Ventures, is set to bolster Bitwise team expansion and core product development. Bitwise growth amidst market uncertainty. Bitwise announcement on February 25th follows a remarkable period of growth for the company, with client assets under management, AUM, skyrocketing tenfold in 2024 to surpass $12 billion. This surge comes as the broader crypto industry navigates regulatory turbulence and fluctuating market conditions, leaving many questioning whether asset managers like Bitwise can maintain their rapid ascent. As part of its expansion strategy, Bitwise has aggressively positioned itself in the digital assets fund space. The firm already offers spot Bitcoin, BTC, and Ether, ETH, exchange-traded funds, ETFs, and has pending applications for ETFs tracking XRP and Solana, SOL. Additionally, its investment solutions include diversified crypto index funds and Web3 focused funds, catering to both institutional and retail investors. The battle for crypto asset management supremacy. The competition in crypto asset management is heating up. Established players like Galaxy Asset Management and Grayscale are jostling for dominance, while traditional finance giants such as BlackRock have made strategic entries into the space. With institutional interest in digital assets surging, asset managers face mounting pressure to differentiate their offerings and scale operations. This rapid growth has not been without its challenges. Regulatory uncertainty remains a significant headwind for crypto funds, especially in jurisdictions where compliance frameworks are still evolving. The U.S. Securities and Exchange Commission, SEC, continues to scrutinize digital asset investment products, making ETF approvals a lengthy and unpredictable process. The crypto asset management market's explosive trajectory. The broader crypto asset management sector is experiencing a bullish trend, with research firms predicting a compound annual growth rate, CAGR, between 22% and 25% through 2030. Notably, Asia-Pacific is emerging as the fastest-growing market, while North America remains the industry leader. Increased regulatory clarity, the growing appeal of decentralized finance, DeFi, and rising institutional demand for digital assets are key drivers fueling this expansion. Other firms in the industry are also making significant moves. In April 2024, Pantera Capital announced plans to raise $1 billion for a new crypto fund covering a broad spectrum of blockchain-based investments. In November 2024, Grayscale reported an 85% surge in portfolio growth within a single month, underscoring the increasing appetite for digital asset exposure among investors. Is Bitwise's $70 million war chest enough to compete? Despite its impressive growth, questions remain about whether Bitwise's latest funding round will be sufficient to sustain its momentum in an increasingly competitive and regulation-heavy environment. Will the firm's strategy prove resilient in the face of regulatory scrutiny and market volatility, or will the evolving crypto landscape present unforeseen challenges? With the crypto industry evolving at breakneck speed, how will asset managers like Bitwise adapt to stay ahead? Could we see even larger investment rounds in the future as competition intensifies?